Good afternoon, trading world. It is after 6 p.m., February 23rd, 2021. Trying to get a head start on my pre-market outlook. I thought I would follow up a video that I did giving you a warning. And let's kind of retrace our steps here before I get into what's next, what's to come. In the last video that I posted, I considered giving it a warning that in the coming days that I would be pulling levels from longer term time frames, because what was to come, that we were going to start having these big ranges basically during the intraday sessions. Ranges that it would normally take us a full week to cover, we were going to start to cover it during the intraday trading market. And then I also hinted that there was the undercurrents of a bounce building. So that brings us to today. I think I made a statement on Reddit that to bounce or not to bounce was the question. And that I also stated that if we got a wash on tick or opening tick below negative 800, that the bounce would get started. However, we did not open below negative 800. However, during the midday session, we did get to below negative 1,000, negative 1,100 to be closer to where we got to. And from that signified a bottom for the day, and we started pushing up. And that brings us to today. Now that we're in the bounce, where are we going in the bounce? And is it time to get long or short, or what have you? Well, my forecast and what I'm planning for, what I will be doing, I will be taking the opportunity of this bounce to actually get short. That's the current trend that I see. Just because we're having this bounce, don't think that things aren't negative, because the current undertone of the market is definitely negative. There's some stuff about to unravel. It may look like everything's fine, we're headed back up, but things are about to unravel. And I'll give you a few more things to kind of look at to kind of show what I will be looking for. One of the first things that I want to show as important, that there are a couple of things that are very important as to where we are headed. This is a daily chart of the NQ, and I'm going to focus. I drew a trend. This trend channel goes a long way back. It goes back to all the way back to March of 2020. We've been in this successive uptrend all the way up until now. And what is very, very important to me, a sign of what is to come, is that, let me see if I can find a tool to kind of highlight this. But what has happened is, if you can see right there, we have breached that trend line or that channel. It has been breached. We didn't close outside of it, but it has been breached. And that's something to take very serious note of, because we've been on a pretty stable uptrend until now. So I'm not saying that the sky is falling tomorrow. It may well be, but this is something to take note of. Now, looking at the SPY, this is an hourly, 20-day hourly chart of the SPY, and this is just to kind of show us where we're headed over the next day or so. I have here what's basically resistance and support. And even though I have this as resistance, we have an uptrend that is begun, or at least the beginning of the bounce right here. What I was looking for, and as you can see, all these positions right before the close, I did take a couple short positions, short puts, and I can share with you exactly what I did, just as precaution. The reason I took the short positions or the puts, it's not because I think that it's going to fall apart tonight or tomorrow. I do think that we could have a pullback, but there are three things that can always happen in the market. We can go higher, we can go lower, or we can stay where we at. Now, in order for us to really seriously break this trend, we're going to have a serious gap down, because there's so many algorithms and buy programs at certain levels that as soon as we reach certain levels, they're going to automatically kick on, and we're going to go back up. And the only way that we're going to get past that is if we have a serious overnight session where things gap down past where those buy programs and algorithms are set to go off. So let me see if I can bring it up on a daily chart. If you can see right here, we got to a level where the low was 380.2 on the SPY, and a lot of buyers stepped up and started buying, hence this long shadow here. So in order for us to have one of those serious pullbacks where we pull back 10% or more, there's going to have to be a huge gap down to where we gap down here in the 370s to kind of overstep a lot of those buy programs and algorithms. So I didn't really take the option position at the close on the chance that the bounce was over, but just in case, because I know that this gap down is coming sooner or later. So I'm going to start to take these positions either by using way out of the money puts every night, just to kind of catch or profit if we do have that gap down, because that first day that gap down hits, the way things are adding up, a couple things could happen. We could either have that limit down where the safety breakers stop the market and we kind of just trade sideways for a while, or one of the things that I'm looking for is that we gap down far enough away from the internals that the market just has to catch its breath, and during one of those moments where it's catching its breath, we kind of just trade sideways to up, and hopefully it happens at a point where it takes enough time that we can take advantage of that and get positions in. But I've seen it before where it happens so fast that there's no time to get that position on or in. So that's why I would be taking positions like this with the puts overnight. And this position I actually did March 1st 21 put at 390. I bought it for $3.80. By the time the market closed today, it was already at $4.50. So at some point I'm going to start looking for these huge gap downs, and I want to just be able to take advantage of it. So back to what I'm looking at on the SPY for tomorrow. If we hold this support area, this 385.68 down to the 383, if we can stay above 383, we're going to go back and visit this area of resistance here, and there's going to be a lot of resistance at this 389.51. But I see kind of a bounce and probably go back and try to fight to get through here. If we go above here, then we're gonna go make new highs. If we beat past this upper level here, this 391, if we can make it through this 391, at some point we're gonna go make a new high. But if we stay below it, it's here, and we're looking for things to kind of break loose. And one of the signs of the market breaking loose is going to be that we have all things, as many things as possible, moving down at the same time. One of the things that I like to follow is going to be the advanced decline of the S&P 500. Actually, the S&P 100. The issues advancing versus the issues declining. Today we ended up at 54 advancing versus 47 declining. It was much worse than that at some parts of the day, but that's where we ended up for the day. So with a move like this, imagine having one of those days where it's 90 declining versus 10 advancing or better, we could be in for some serious movement at that time. And one of the things that, when you look at the different areas or the different sectors of the market, two things that usually work to hold the market up is tech, which I look at as the QQQs or the NQ, and financials. Those are two of the biggest sectors that work together to hold the market up. Now the issue is, I just showed you a chart where the NQ breached the lower end of that channel, which means it's not holding together very good. Now, if you team that with the XLF, we could have some bad news going pretty fast. So looking at the XLF, which is the financials, if we breach the support here and come out the lower end of this support, that's the beginning of the unraveling of the entire market. I don't see it happening this week, or at least tomorrow. I don't really see it happening. We're so close to the upper edge of the market maker's move on the XLF that I think where we're headed, or the goal to look for this week on the XLF, is somewhere around 33.17. If we can get to 33.17 this week, that's pretty much what I'm looking for. Now, after we get to 33.17, you can expect a nice turnaround and just kind of just forget it. You know, where we hit 33.17 and maybe go through it, and then at some point it's just going to fall apart. So one thing that you can do to take advantage of that, you could probably set a butterfly spread at that 33.17 area. I, for one, may be looking to get short somewhere above that 33.17, because once we breach this resistance, it's going to lose its breath, and I'm going to be looking for an oversold condition in turn with internals to see where this fade might happen, and be looking to short the financials from that point. But once we break through this level, it could possibly be game over for the entire market. We're going to see everything begin to unravel, because you already have tech, the QQQs, the NQ, you already have those already unraveling itself. And with those two markets or sectors unraveling, it could spell some bad news for the entire market. I'm going to look at one more sector. I'm going to be following one more place I'll be looking to place some positions is the IWF, or the IWM, I'm sorry. And with the IWM, we got a lot of resistance to make it through. You have a lot of resistance right here at this 222.85 area to make it through. You can see we've already bounced off of it once. I'm going to look for us to give it a try again, and if we can bust through it, this is the level where I'm looking for us to head, between this 226 to 228 area. That's the area that I would be looking to take a short in the IWM. If I can get the three things working together, where I reach this area, volume starts to disappear, and we have that overbought condition with weak internals. So if I can get those things to all happen together in this area, I will be looking to take a short here in the IWM. One of the things that I'm doing, I'm not even going to waste time with individual equities. I was looking at trying to get some positions on in Apple, in Deere, in a couple other places I may, but my priority right now is to cover the indexes, because that for me is where I'm going to be able to make the biggest gains from me, by being able to roll that. Because when it gets going and we start to have these big, if you can take a look at some of the size of these candles, let's go back to, let's go to a 5-minute. This is basically a 5-minute chart of the SPY. If you can see the size of these ranges right here, the reason why I'm sticking with the indexes, number one, there's plenty of liquidity, and when we start making ranges like this, the bid-ask spread starts to get bigger and bigger. And in some equity products, when the bid-ask spread starts to get bigger, and we have these huge ranges like this, and things start to move really, really fast, it's going to be hard to get out of some products. It's going to be hard to liquidate. It's going to be hard to get out of, however, whichever position you're in or looking to do. It's going to be hard to operate. So when things get to this point, to where I see where we're going to have a range where, even on something like the SPY, we're going to have a range where we cover 10 points. 10 points in a day, 15 points in a day. And when things start moving like that, it's going to be very, very, very hard to move out of illiquid products. So majority of my positions are going to be on the main indexes, like the SPY, like the IWM, the QQQ, maybe a little bit in the XLF, maybe a little bit in the EEM, but majority of the things I'm going to do are going to be in those products. So once we get these bounces happening, a little bit more into the strategy, I'm going to be looking to do two things. because I'm going to be looking to stick into some put options for a while and kind of roll them out. So I'm going to give myself a little bit of time, at least maybe 15 days of time at least, on something like the SPY. And I'm going to be looking to find a put where delta is at least 70. 80 is good if you can afford it, but trying to get delta up there on a put, it gives you time, so when you have those down shoots and it starts, those wild ranges where you go down 15 and you come back up 10, it won't kill all the juice out of your puts, and then at the same time you can kind of roll them out for even further time and take some profit by rolling them out, but still being able to stay in the position. So that's what I'll be looking to do, as well as just taking on some out of the money puts. So that's what I'm looking at. That's kind of my outlook for tomorrow and a little bit beyond, getting prepared for what I think is going to be a huge pullback in the market. And right now, with this bounce here, it's time to get in and set those positions when we get to milestone areas in this bounce. So if I were you, I wouldn't be looking to get too long in this bounce. I'd be looking for opportunities to short, and this bounce is giving us that opportunity. As always, please know your risk. Make sure you put up nothing that you can't afford to lose. Make sure you know what it is that you can lose. That's what I mean by knowing your risk. And trade safely, profitably, and have a great day.